Gautam Duggad joins in, Head of Research at Motilal Oswal Securities, to talk more about the markets. Gautam, it's great to have you in the show. How's it looking stepping into 2018? Are you as excited as you were same time last year?
Hi, good morning. First of all, a very happy Christmas and wishes for the new year ahead to your viewers and your team. 2018 was an exciting year. We never thought that after a very calm and serene 2017 we will get such a volatile year, whether globally or locally, and December is just capping that up. 2019, I think the first half will be again very volatile. So many things to drive markets, and of course elections, global events, possibility of a US slowdown, global central banks all in a coordinated move, shrinking their balance sheets. But what is keeping me excited is the revival in the earnings. We are seeing good signs of earnings pickup, and at the same time macro story has fallen in place for India in the last 2 months. So 2 months back we were all scared about crude and currency volatility. That has settled down. Liquidity issues are getting addressed, so there has been no liquidity crisis that everyone was fearing about. And bond yields at around 7.2, 7.3 is giving some cushion to the equity valuations. So, we are back at 17 times 1 year forward with the possibility of an earnings upside. And of course, in the meantime, we'll have to negotiate with the political uncertainty till around May or June. And after that, while people will have a lot of views on elections, I think if you look at the last 15 or 20 years of data points around elections, the broader direction of the market hasn't changed much. And if you look at last 15 or 20 years of market pattern itself, this election day or election related events appear like a blink on the screen.
Gautam, very quickly, what are the top sectors that you're betting on? Your top 3 sector, or if you can get specific stock ideas for 2019.
See, we have had a preference for private banks, consumer, auto in the last year, and I think that will continue. I mean, defensives will be the flavor of the season in the first half, clearly. Given that correction in auto has been very sharp in 2018, I was looking at the aggregate market cap data of all the sectors that we cover. You've seen almost 24% correction in the auto aggregate market cap in 2018. So I'm quite excited about auto, while I know that the next couple of months the monthly data is not going to look very exciting, but I think it is giving you an opportunity to get into that sector at a relatively more reasonable valuations. Our bets are Maruti and M&M in auto. Private banks, we've been talking about it since throughout 2018, and I think you're entering into a year where banking looks to be the trade of the year. All the pieces are going for them, whether it is pricing power, loan growth, asset quality issues, provisioning requirement, and valuations. So I'm quite positive even now on corporate banks, given that valuations are in their favor. Selectively NBFC and consumption, our bets haven't changed for a long time now. We continue to stay very positive on consumption, given that it's an election year. There will be political spending which will augur as a quasi stimulus for that sector. Our bets in consumer have been Titan, Britannia, Pidilite, Hindustan Lever, and in the tier 2 space we've turned positive 3 months back on Marico. So those are by and large the big bets that we have for 2019, and incrementally some of the mid caps are looking more attractive now after the valuation premium has eroded virtually throughout the 2018. At the beginning of January 18 you had a 60% premium to large cap index. That has shrunk to just about 10% now. So you're getting a lot of interesting bottom up opportunities even in mid caps across the spaces.
Yeah, that's the case. Gautam, though, largely, what is it that you're expecting from earnings? Because soon, once we roll into the new year, 10th Jan onwards, you'll have IT hit you with earnings, and Infosys being the first one of the lot. We were just having a very interesting discussion on IT sector and whether or not the kind of momentum that IT has seen with regards to the way the rupee has moved, or for that matter, the kind of deal wins that we've seen from the US geography, whether that's going to roll into 2019 or not. And, there seems to be a consensus that things still very much are in ship shape for the IT sector. But do you believe that a large part of the rally is behind us, and that optimism and enthusiasm for IT sector is already done and digested and well in the price, because 2018, one of the key outperforming sectors has been IT across the board, mid as well as large caps.
Yes, Aisha, in fact, within the sectors that we cover, IT has been the best performer this year with a 27% market cap accretion if you put together all the companies. But despite that, the valuations are still reasonable. The fundamentals look quite stable for them. Only factor which has gone against them in the last 3 months is the rupee. And I think from a longer term perspective, rupee, while it is important in the equation, it doesn't decide the trajectory of returns from a 3 or a 5 years perspective. We like large cap IT names, and also you have to cognize for the fact that a lot of these IT companies are consistently giving back the cash to shareholders. So that puts a sort of a floor on their valuations. And in a year where you're looking at significant volatility ahead, I think exposure to IT, some of the other defensives like pharma or consumer, will provide some shield to the portfolio from excessive volatility in this kind of an environment. So we do like IT. Within the large cap, our preference has been Infosys and Tech Mahindra, and in the mid cap, we've liked L&T Infotech, Mindtree.
Okay, Gautam, great to have you on the show. Thanks so much for taking the time out, and we'll meet again in 2019. So here's wishing you a very happy new year.
Same to you and all your viewers. Thank you.